Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. We're going to continue on our education series that we talked about in our last session. If you remember, if you listened to our last session, we talked about education credits, and we spent some time talking about the American Opportunity Credit and the Lifetime Learning Credit. So if you haven't listened to that, go back and listen to that, because it's really the starting point for our whole series on education. Now, this session, I want to talk a little bit about some of the deductions that you can take. So we're not talking about credits now. So it could be that you don't qualify for the credits because you don't fit in with the eligibility. Maybe your income is too high. But there are also some other things that you can deduct that are deductions. Now, one of the first ones, and this is one that a lot of people don't think about, and that is student loan interest. So once you've finished school, and let's say you've got those wonderful loans, and we're going to talk about loans that are related to education here as part of our series as well in the future. But let's say you've got those student loans and you're starting to pay interest. Well, one of the things that you can do, and it's a front page of the 1040 deduction, not to lose you in the details, is you can deduct a student loan interest deduction. Now, the way that works is the amount you can deduct is the lesser of $2,500 or the amount of interest you actually paid. So what am I saying here? If you've paid student loan interest, up to $2,500 is deductible. Now, there are some income limitations, so let's dive right in there and talk about that. Now, this is something that you don't need to itemize in order to qualify for. Most of the deductions that we talk about, for example, medical or dental expenses, taxes, mortgage interest, those type of things are all what they call itemized deductions. And with the changes that happened in 2018, I think you're going to see a lot fewer people able to take the itemized deduction. So this is one that doesn't really bother you in that case, because this is a front of the 1040 deductions. So here's what you need to know to claim the deduction. And it's if all of the following apply. So this isn't an or, this is an all. Number one, you paid interest on a qualified student loan in the tax year you were filing for. So this has to be paid on a qualified student loan. Now, I'm not going to spend a lot of time talking about what a qualified student loan is. We'll talk about the different types of loan products a little bit later on one of our new sessions. Now, you're also legally obligated to pay interest on a qualified student loan. So what this means is that you cannot take this deduction if you don't have to pay the student loan. That might seem kind of silly, but what they're talking about here is if the student loan is not in your name and you're not obligated to pay it, then you cannot take a deduction for it. Now, one of the big things you need to be concerned about is your filing status is not married filing separate. So we've talked about filing statuses before, but married filing separate is the trapdoor for this particular deduction. If you do married filing separate, this isn't going to work. You can't do it. Now, the income limitation here is your modified adjusted gross income is less than $80,000. That's for a single filer, or $165,000 for married filing jointly. Now, there is a deduction phased out when your modified adjusted gross income is between $65,000 and $80,000 when filing single, head of household, or qualifying widower, and $135,000 and $165,000 for married filing jointly. So even though they get that threshold of $80,000 for deducting that interest, you need to understand there is a phase out from $65,000 to $80,000, and then for the married filing joint from $135,000 to $165,000. Now, another key part to this is you and your spouse, if filing jointly, cannot be claimed as dependents on someone else's return. And I think this is kind of a silly one, because the truth of the matter is if you and your spouse are filing jointly, you couldn't file a joint return if you're being claimed as a dependent on someone else's return anyway. But this is what they say here. Now, and you have to have received Form 1098E from the educational institution for filing purposes for those who paid over $600 in interest. So the loan company will send you a 1098E. Now, a point of notice is that you may have to go download this form. A lot of places are not mailing these out anymore. So if you've got student loans and maybe you've got them on automatic payment, so they're sort of an out of sight, out of mind thing, make sure at the end of the year, give it till about the middle of January, go look for that 1098E. Now, The other thing, in addition to student loan interest deduction, is the tuition and fees education tax deduction. This was supposed to go away for 2017, but it was retroactively restored with some tax extenders that happened back in the beginning of 2018. Now, if you phase out for the lifetime learning credit because your income's too high. And we talked about that in the last session, how, what the lifetime learning credit was and what the income limits were of that. But if you do phase out, then you may be able to take this deduction. Now, one of the things you need to know is you cannot take this and claim the deduction for the credit at the same time. The credit subtracts the amount of tax you owe while deduction subtracts your taxable income. So again, this is one of those things that's going to come off of your taxable income. It's not a credit dollar for dollar. So whereas a credit is going to be a direct reduction in tax, a deduction is just going to reduce your income before tax is applied. Now, to be eligible, the student must be enrolled at least half-time in a program leading to a degree, certificate, or other recognized educational credential for at least one academic period during the current year. So at least half-time student, and it has to be in a program that's leading to a degree, certificate, or other recognized educational credential. Now, the deduction amount is up to $4,000 of the cost of tuition, fees, and course materials paid during the taxable year per tax return. This deduction is an above-line adjustment to income, which means you can claim this deduction even if you don't itemize. So along the same lines as the student loan interest, this is the deduction you can take even if you're not itemizing your deductions. Now, in order to claim this, like I've mentioned, this is going to go on the front page of your 1040, but there's a form 8917 that you have to fill out in order to get this deduction. Now, there are income limits for this one as well. So a taxpayer whose modified adjusted gross income is $65,000 or less, or $130,000 or less if you're a joint filer, can claim the deduction for the qualified expenses of an eligible student or for work-related expenses used for another deduction or credit and student fees that are not required as a condition of enrollment or attendance. So this is one of those things that you can do if you don't qualify for the credit. So a lot of times, when we have a client come in and we're talking about, education, these are some of the things we talk about. Maybe you don't qualify for the credit. Maybe the credit's just not going to work for you, but you've got to think about along the lines of these other things, these tax deductions you can take. So it's really important, that you take advantage of, keeping track of your expenses, making sure that you've kept track of your student loan interest. And one of the things I'll mention while we're talking about student loans is, don't default on your student loans. The IRS will actually, take your federal or state refunds if you don't pay your student loans. A lot of people don't understand that, and they'll say, "Yeah, I didn't get a chance to, to pay those student loans." Well, that will come back and bite you. And I'm not an attorney, so I don't want to give you legal advice, but there's some real strict laws about bankruptcy and all that as well as it relates to student loans. But trust me on this, they will offset your refund if you don't pay your student loans. And again, remember with these credits or these deductions, there's no deduction if you file separately. And for great information is publication 970 from the IRS. And we'll continue our education series with our next session.
You've been listening to Ask Ralph, brought to you by Sazio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Sagio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.